Pretty sharp comeback. Joining us now is JPMorgan's head of Department and Specialty Softline Retail. Good title, Matt Boss, which means that you cover all of retail. What do you expect first, Matt, from the department stores, especially Walmart and Target, where expectations have been lowered all year long? Target's down 25% this year off a few warnings.
So thanks for having me on, Sarah. Look, I think what you're seeing is the consumer picture as a whole, I think, is stable. You're seeing pockets, though, of cross currents. So I think the lower income consumer, more so on the discretionary front, that's where you're seeing the primary pressure. And that's really what you've had intra-quarter with some of the discounters. Now, it's not all of the discounters. The dollar stores, Dollar General, Dollar Tree, have seen much more robust results. And that's because they're selling need-based food at roughly 80% of the mix. What you saw throughout the quarter at Walmart and Target is a little bit different, where it's much more of the discretionary, the larger ticket, consumer electronics, home. And I think that's what we're seeing in our work is pandemic benefit categories, soft home furniture, as well as consumer electronics, as well as stay-at-home apparel. Those are the softer areas, but things, as you cited before, the shift towards travel and leisure and some of the service elements, as well as some of the key destination brands, those are holding up very well, in our opinion.
I guess what I'm trying to figure out is what to do with those stocks, because all those issues that you mentioned is why we've seen some trouble in Walmart and Target. Do you expect more bad news this week, or do you think that it's been factored in?
I think the key to this week across the retail spectrum is going to be inventory control. So we cited in a note this morning that the wild card, in our view, for the retail earnings season here, I think the can has been kicked, where retailers had said some of the excess inventory that entered into the second quarter, they believed would be cleared by July. I do not believe that the inventory position across the apparel side of retail on the discretionary front, I don't believe that we've seen that cleared. So I think you're going to hear retailers talk about the actions needed to clear inventory as you move into the third quarter. So we're expecting a highly promotional back-to-school season, as well as third quarter cuts. Now, I think one of the things that you cited in terms of performance for the group, I think the E that the buy side is using and that investors are using is much lower than consensus. Across the board, we're almost 20% below for earnings in the third quarter. So we've taken that cut. I think second quarter rough and third quarter cuts are in these stocks. But I think if retailers have a game plan to come into holiday with their inventories clean and they speak to a robust consumer, I think the group can work from here.
What about athletic, Matt? You've been doing a ton of work lately on Nike and Lulu, which I know are two of your favorite stocks, but on what we can expect on inventories and profits and how that might not be lining up with what the street is expecting. What have you learned?
I'm glad you asked. So, look, I think they're kind of a tale of two worlds right now. Lulu, I think the business is stable and, if anything, has a tremendous amount of momentum. They fit squarely into the lifestyle, hybrid, wardrobing, more casual. All the tailwinds, I think, are right now in favor of Lulu. We're expecting a strong quarter and continued momentum. Nike has two issues. You have, number one, the issue in China, and they have concentration in that region. That's obviously something that I think is at the forefront for investors with Nike. Secondarily, 65% of Nike's inventory right now is in transit. Now, the clarification that we had from management was they remain in a pull market, meaning inventories are clean today for Nike in both North America and Europe. But what you're seeing on the promotional front is, as this inventory arrives, if the seasonally non-relevant products, so if shorts arrive right now, they open up a container, that inventory will immediately be marked down. So it's disrupting the athletic backdrop right now, but it's all planned and it is all in Nike's guide for the year. It's just a matter of the first and the second quarter, where our models are anticipating a bit more pressure to clear that excess inventory. But we are in a pull market in North America and in EMEA, which I think sets up very well for the athletic companies as well come the back half of their year.
So you like it, but you see more earnings risk than what is priced in. Matt Boss for Nike, that is. Thank you very much for joining me.